Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday, and we're at the 3rd of October, 2023, 5:45 p.m. Central Time. What a day. Right into the toilet. The financial markets, stock indices, stocks themselves, the metal markets, everything falling apart. Interest rates are just killing the market as they keep going up here. You're at rates you haven't seen in the 10-year note for many, many years. You're at 4.77, 4.76. I mean, you're not far away from the 5% that Bill Ackman and others were saying we were going to, a quarter point. It's nothing if it wants to march right on there. And what it's doing is it's scaring the heck out of people. They're realizing suddenly, this is no good. It certainly didn't help the market that everybody had one eye watching. I was watching it screen. Oh, yeah, look what's going on in Congress. Are they going to oust the speaker? I'm looking here because that's what people were doing. And as the votes were coming in, the market in the latter part of the day tanked again because that's not a good thing. Dysfunction by the Republican Party is not a good thing. Congress has plenty of its own dysfunction. It's terrible. You know what I think of politicians if you tune into this station. You know I think very little of them. And the reason is they're typically dysfunctional. They wait till the last minute to get anything done. And in this case, they didn't. It was, come on, I'm going to challenge you. And McCarthy just said, let's just get it done. And he lost 2 quick votes, and he's out as House Speaker. So now we have to find somebody new, or the Republican Party has to find somebody new. Who that person will be, I don't know. I'm sure they'll be capable. And then they have to start all over, putting everything together and pick up the pieces, because you only got 45 days unless you're going to go back and get another extension. Now, each extension's hurting countries like Ukraine, but I read a lot of reports today. And the reports are on Ukraine are, believe me, from the reports. I don't know that there's reality. And the reports are from credible sources I was reading that I thought they really have enough money to make it into the November-December period. I did not realize that without U.S. money, there's like 500,000 clerical people. They wouldn't be paid. School teachers, not paid. Fire department, not paid. So between us and our allies, we are just supporting the country, and how dare Ukraine take Poland to the World Trade Organization? Hey, if you don't want Ukraine grain dumped on your market, and I'm giving you a fortune in money to support you in your warfare, shut up, move on. You don't like it, I get it, move on. They didn't say you couldn't ship through the country. They don't want it on their market. That's how I feel. The more I read about that, the angrier I'm getting at Ukraine, because they're overstepping, all right? They need the support of all of us. And we really wish they weren't in this war, because we could use those funds ourselves. Migration in the United States, the border issues, come on. We are taking back seats to help them. Poland took a back seat to help them. Other countries there's 2 other countries that did the same thing. It's not right. I think they should rethink it, all right? It's that simple, especially now that the U.S. has cut off funds for a short while. So where do you go with all this? Well, here's where you're at. Why should interest rates fall right now? I don't see a reason. We refuse to attack the budget deficit, number 1. Number 2, we keep asking for more money. Number 3, that on the pit parade, the Fed's rolling off its balance sheet. They're not there supporting the market. Number 4, the U.S. Treasury every single day is issuing like $100 billion worth of treasuries as it needs to get to $1 trillion of funding. And in order to attract that money, they got to keep paying higher and higher rates. That's being seen in your bonds and your notes right off the bat. It's like we're in this vicious circle, and I don't see us coming out of it anytime soon. Once you cross the 4.3, 4.4 area in the 10-year notes, you went into uncharted territory, and it took no time at all to go to 4.75. Did I think you were going to collapse in the stock market the way you did? No. Did I think gold would go down? Yes. Do I think gold's still overpriced? Yes. But this is the market now you got to keep your eyes on. But remember what the month of October is. I don't know how I can take you and bang it into your head. I told you September is the weakest month of the year. The most volatile month of the year is typically October. Remember the October crashes you hear of and things like that? Well, we're in a mini form of a one right now. What if I told you the Dow Jones is now lower for the year? It's wiped out its whole game. Most people wouldn't know that. It's the way it is. What about the AI stocks? They're getting smashed everywhere you look. I understand. It's a great thing that's going to come. But right now, it's all about interest and where you're at. When you take a look at the E-mini S&P, so far for the week, you're down 1.5%. When we take a look at this chart, you were just August 31st, 45.65. You're 42.65 right now. You're 300 points lower. That's a big break. It's about 7.5%, 8%. When you take a look at the mini index, it is still very much in a downtrend. The market now cleared like it didn't exist. I was surprised today, and not trying to get back over it, the 200-day average of closes. And the Bollinger Band, well, you were running it, you moved to the right-hand side, and as I said, that's not a sign this market's ready to rally. Once you move to the other side and you stay there and you keep declining, you're gathering even more strength and you're not getting oversold in the process, and you have an embedded reading. If you don't understand the purpose of what I teach on the Bollinger Bands and what happens when you get these numbers that lock in and embed to the downside, that's what embed means, lock in, and they get under this 20 reading and the impact on the market, shame on you because it's there. Could we get sharp rallies at any point? Well, you've just come down 300 points. Of course you can get a sharp rally, but will you get a trend change? My prediction is no. You need something in the economy to make that so you can get at any point a technical switch. You were just at 15,733 in the NASDAQ. You are now at 14,717. You are down 1,000 points. Does it feel like it? Look at that break. You had a bearish crossover just now where the 18-day average got underneath the 100. And momentum is oversold. This market is not my favorite to be short. Why? Leading us out of all this will probably be the goodness of the artificial intelligence. Everywhere you look, you're seeing that is what's taking place. And my guess is that's where we're at for this point in time. Read the story that was out today. I think it was Dow Jones published it on Amazon and what they were using in artificial intelligence in 2019. And part of what the case to break this company up is about, their monopoly on pricing. I don't think they did anything wrong in reading all the details. And I spent a good half hour reading the story today of using artificial intelligence to see what the Target is doing, Costco, setting their prices accordingly. Sometimes they'd stay higher and lower, looking at it. What's so wrong with that? So I'm not getting it. I realize they're the behemoth and everybody wants to rip them apart. But so they used artificial intelligence to make their pricing? Not convinced that there's anything wrong with that. In the Dow, it just keeps falling apart. You were just 35,121. You are now 33,200. So you're 1,900 points lower. That's one heck of a break. And now you've wiped out the whole year. So you're back to square one. Remember when we had this crossover and I pointed it out and I said, when you get those crossovers, be careful. Markets like to go after those most recent lows, and bang. It took all of just another day or two, and you completely took it out. Now on rallies, you've got areas of strong resistance, and I think traders would love to say, Ira, you're pointing, can I get back to the 3,400 area? Eventually. It will happen, eventually. Remember what I think September is. September, when we were in it, is the big down month. What did I tell you October is? The most volatile month. So the most volatile is going to be down like this, and for whatever reason, we'll find something we like. The market gets a bounce eventually, and then you have to decide, are you going to get that year-end rally? So yes, I do have faith that eventually we get through this. This month, will be a surprise probably, somewhere along the line late, I hope, to the upside. In the E-mini Dow, first you got to come down. The volatility's got to take place. In the Russell, still coming down. I'm eating my heart out. Yesterday, I thought it was time to take money off with some short positions that I had for my clients. One day too soon. I know it. Nothing wrong with the profit. Got that? But a day too soon, no question. 10-year note, there's nothing here. I mean, this is the Gorilla Glue trade. Do you believe in these terms yet? Once you latch on and you get an embedded reading, it is the kiss of death. I know there are people going, it just can't keep doing that. Oh, yeah, it can. 5-year note, same thing, but not embedded. You lost it, now you're coming down. I'd be very careful right here. These markets are ripe for corrections. Absolutely ripe for them. Will they happen? I don't know, but they are. Is that going to change the direction that they're in? I don't think so. So in the dollar, if I saw a good break in the market, yeah, I'm going to tell my clients, hey, I think you buy until the red line is back under 79. And barring that, and it's been this way almost from the first week of September. Think about this. So you're over 4 weeks where it's been embedded, and what's the market done? It keeps churning to the upside. And in the euro, same type to the downside. I haven't changed my opinion. Where's the euro going? I don't know. I know the dollar can cross, 107's here, but you can go to 110. So you got to be careful here. This can then pressure that to the parity level. In the British pound, absolutely still down, embedded reading. It's a constant story. None of these markets are buys. It's one thing to cover shorts. It's a very different thing to fight this trend. This is a trend. And on the good rallies, it's saying, come on in and sell me and see if we can continue going down. At some point, that won't work, and you'll get a correction in the market, and you start over. But right now, big bear trend. Bitcoin. By the way, the government, the SEC, is now going back after Coinbase. So today they announced, remember, they had to make a decision where they're going to appeal and do some other things. I understand they are. We had that one beautiful rally, that one day where you're supposed to come out at the Bollinger Band, let alone the first challenge of a major moving average, and it just fell right back on its butt. But there are now more ETFs being allowed, but again, they're not on spot markets. They're on futures markets. Very big difference. And the logic there is the exchanges are acting as the party to do the due diligence, to make sure the shenanigans isn't going on. Everything's done in the right way. The spot market has none of those controls. That is what the government's, I still don't see how they're going to do that anytime soon. In Brent versus WTI, the word that I keep reading is this. Number one, tomorrow we'll get the announcement, what is OPEC doing? Supposedly, they're going to keep their policy where it's at. But what is their policy? I wrote today that suddenly I'm reading an article that both Saudi Arabia and Russia increased production in September, at times 800,000 barrels a day. And obviously, they were working on which markets would get what for them and where they're at. All right, was that to keep pressures from getting too much out of control? Probably. But think about the stock market, $100 or $90 plus Brent. Nearly the same prices you're going to see in WTI. Here you are at 89.19, but you were just at 93. And notice how I got these bands and they're just going sideways. I think you're in a trading affair market more than anything. WTI, similar, doesn't want to seem to be as weak as Brent, doesn't want to go down to the lower band, but it's fighting a battle at the 18-day average. But yet in America, we're at $89.50, and we're not opening new wells. You saw that last week's number from Baker Hughes. So as I told you, the Biden administration has effectively cut off big oil. They will say yes to the Biden administration on everything the Biden administration wants to hear. There will be no action because they know that they don't have a friend. They can't count on his policy. They can't count on the man. And therefore, they're not going to go out and commit to the money. They're going to look to do other things. And you're seeing that. That means less oil on the market. And you'll say, but Ira, the U.S. oil production is up. And it is, because they're taking the same wells and they're getting more out of them. Got that? The technology of fracking keeps improving. The well life is very short compared to offshore wells, compared to deep dug wells. But fracking works. You just go through the well quicker. In the heating oil, I thought the market, I didn't want to see this today, in all fairness, getting down to the Bollinger Band, but I thought if it got there, it would hold. And it did so far. That doesn't mean I'm right. Big resistance, the 326 area. I'd be very careful. It gets up there. I think those that are long might want to consider just going, maybe it's time to evacuate. It wouldn't surprise me if you get something like that. In the natural gas, we had a big outside day to the upside. It's one of the few markets that was what? Take a look at this. A gain? How many markets were up today? Very few. And all of a sudden, we have higher lows, higher highs. Momentum turning up. Until today's lows taken out, short term, you can make an argument, let me come back this way, that the market is trying to say maybe it wants to give you a short-term rally. Do I think there's a lot in it? I don't. I think the market's caught in sideways action more than anything else, but you have that opportunity, so you got to mention it. Now, here's an opportunity for you on all the different things that we offer, and you need a lot of these. You know, as you take a look, our QT Market Center charting software, access to my different research, the Linn charting software, so you get different programs that work in different ways. Then our price counts, probably the big thing you should get for yourself, so you see where markets might head. We come over to the modern day traders, profitable strategies in any type of market, at least their idea of that. Pivot Point series, my Arun series, they're all here. All you need to do is click on it. It's like a cart. It's at iraepstein.com, free offers. It's also, if you move right up here, you'll get it. You then at the bottom go in and you're going to put your name in, your email address, get us the information. We will email it to you generally the next business day. All this will open up and you'll go, whoa, this is pretty cool. You'll start getting the newsletters and the free trials to things. Takes us about 24 to 48 hours to get it set up, and away you go. So just click as you see us right there, get it into the cart, mail it, you're done. I'm Ira Epstein. I'll see you first thing in the morning. I didn't do a morning update today. I did get that COVID shot, and I admit I had a bad reaction to it. It's knocked me out the whole day. I'll take that. I don't want COVID. You take care.